Hi, everyone, and welcome to the Amber Data Derivatives Podcast. I'm here with Ilan Levy-Mayer, who is a partner at Cannon Trading. Ilan, how are you?
I'm good, thank you, Greg. How are you doing?
Doing really well. So this is the first time we meet. We briefly chatted before recording the podcast. You have quite an interesting background. So I was thinking maybe we could start there. A little bit about your background, how you found yourself into trading. Did you always know you wanted to be a trader? Did you do any other careers before being a trader? I think I know the answer, but maybe we could just dig into that, and then we could talk
Trading,
about what you're doing
trading
now.
was trading was the farthest thing on my mind when I was 20 some. I came to the US when I was 16. I played high school and college basketball in some good programs. And I was always a good student and I was always interested in marketing and finance, but I never thought about trading. After college, I went back to Israel where I played professionally for 5 years. Tore my ACL at one point, tried to continue, was not mentally tough enough to go through it. And at that point, I decided, okay, I'm going into the business world.
Mm.
And that's when the internet just started over there in Israel, 1997, I want to say. And I was working for an internet company managing, our, quote unquote, the website division when people were just starting to build websites and the internet became slowly mainstream. And my older brother, Mike, he lived in Los Angeles for years and still does. And he founded Canon Trading back in 1988.
Oh, wow.
So in 1998, I was thinking, okay, I think I'm coming back to the States. I want to come back to the US. So I left Israel for the second time, came to the US, and I was going to go into the high-tech business, to the internet security, etc. And my sister-in-law, bless her soul, said, why don't you come and give it a shot with your brother, see how you like it, blah, blah, blah. Long story short, 30 years or so later, or 25 years later, here I am. I started into the commodities. I remember studying for the test and thinking that it's all about supply and demand, and I'm going to do my research and I'm going to give my clients this great advice based on supply and demand. And sure enough, you learn very quickly that there's so many factors into this fascinating game of trading and being a commodity broker.
Yeah, absolutely. So that's fascinating. So there's kind of two thoughts that really stick out to me. First off, is I've noticed this a lot on the trading desks. There's kind of people who have sports backgrounds and other people who have sort of the academic backgrounds, and both people do really well. There's kind of like a nice set of disciplines from the sports side of the business that like applies really nicely to trading, and then to the quant side, the academic applies very nicely. So that's kind of interesting to hear. You had a professional basketball sports background, and I wonder if anything there has carried over. And then Canon starting in 1988, that's really fascinating as well. I mean, a lot of trading firms have sort of short lifespans because the markets go through such different cycles over, the past 32 years, 36 years, whatever. So how did your brother and yourselves manage all the different market cycles and, everything that we've experienced since 88 in terms of trading? Maybe you could touch on that as well.
Yes, keyword is adapting. But also to keep in mind that as a brokerage house, we do not make our income from trading per se. We are commodity brokers. Our job is to help, to educate, to assist, to onboard clients who want to trade. And I believe that almost all of us do some trading in one aspect or another, but we are first and foremost brokers, service providers, sometimes psychologists, sometimes tech support, sometimes risk manager. So that's a big key. So we did see the markets evolve also in the technology and how trades are being transmitted. Back when I started, there was no such thing as online trading, or maybe it
Right.
just started. And now everybody trades online. So back in the days, if you wanted to get if you were a heavy player, quote unquote, you would have a direct line to the floor of the S&P 500.
Mm.
Instead of calling a broker who would then call the floor broker. Things have changed now. Now it's a click of a button and you transmitting orders. So that's one thing. The other thing is that we always try to stay on top of the compliance and the regulations and make sure that we do things the right way. And sometimes it slows you down, but in the long term, I think it helps build a good foundation. And we are not a large group. We are relatively a small group, but all of our brokers, I want to say, give or take, are at least 10, if not 20 years with us. So we all know the business of trading. We understand the business of commodities and futures, which is not as easy to most people, for example, as talking about stocks. So we combine the knowledge, the service, and variety of platforms, as well as clearing arrangements to try and be flexible and adapt to what's going on in the market.
Yeah, that's fascinating. And you mentioned about, a lot of flow now is electronic. We've seen spreads come down over the years to now it's sub-penny trading and things like that. Do you think commodities are more resilient to a broker model because we have sort of natural hedgers and natural players in the market who might be, making, if I'm an oil company or, for example, I have some future production that I might need to hedge out, or same thing with grain farmers and things like that?
Yeah.
Or is it
Yeah,
unrelated?
No, I think you're absolutely right. The commodities, you never say never, but I don't see any reason why commodities ever going to go away because of what you just described. There is the core business or the core need for the hedging, which fuels the commodity business. But obviously, those hedgers without speculators would not coexist, or would not be alive. So that's one part. And then there's so many other factors that comes into futures and commodities that are, in my biased opinion, are the real thing. That's where the professionals come. You don't have, there's no, day trading short rules. Don't go short here. Don't do this. You have to borrow money. You have to have a certain account size to do this or that. Here, all orders go to the same exchange. If it's CME, OI, so any of those, it's a fair plane level, fair level field of plane. Like you could go, my order that might be a one lot can go with one of my largest clients that sends 2,000 contracts. We're all coming to the same place. It's not like CFD or Forex. You know where everything is going, and also it's not like stocks. People cannot sell your order flow. There's not this ECN or that ECN that the orders are going through. This is more, how should I describe it? I think it's more professional. That's where the professionals are going, but it's hard for the newcomer, the little guy, to compete with the professionals at times as well.
Yeah, that makes a lot of sense because I know like big hedgers like BP, they have their own trading desks, but I might not be big enough to own my own trading desk, and so it kind of makes sense to work with a professional like yourself. Like, okay, I call up Ilan, he's been around for 36 years, or how long Canon's been around. So like, I can get a lot of insights from you without necessarily needing me to hire my own full-time trader to do this all from scratch. What is the core of your customer base? And maybe you could just talk a little bit more about the broker model, just for new listeners, that we can understand how does that all work?
Of course. We have a small part of clients that are exactly the way you described them. They're either hedgers or retail clients that are looking to either hedge or speculate and value the opinion, expertise, and the knowledge that we have. But those are not traders that are in and out as far as day trading for the most part. They'll hedge their, I have a rancher who needs to deliver some cattle in 3-4 months. We will look at some option strategies. I'll get his opinion, his feedback, because he is in actual business. Then we'll translate it to my knowledge of options and futures and combine a trading strategy. We have what we call broker assist clients that may call and talk to their brokers and say, hey, John, what do you think? I like copper. Would you go long? And John will look at his chart and give the client his opinion, and the client can take it or not, and the broker can help execute it. However, the majority of our clients are actually online self-directed clients that come to us. They open an account as little as 1,000, as large as 8-9 figures. And then our job is to help them find the right platform if they don't know one, or help find the right onboarding situation based on their account size, what they're looking for. They're trading off of order flow. Do they need any specific special arrangements, any special needs? And they trade as online clients for very low commissions. And we are really the customer service providers, the tech support, and the risk manager. Hey, Greg, you trading treasury bonds. It's time to roll over to September. Otherwise, you risk taking a delivery on the treasury bonds and you don't have that in your account. So little things like that. But there's always ins and outs that are different about futures trading.
Yeah, that's fascinating. And it's really interesting when we look at futures markets for like kind of financial futures like the S&P 500, where the contango is really driven by, borrowing costs and dividends. And then we look at, hard commodity futures such as oil, which actually went negative in April of 2020. I mean,
right.
How did those dynamics affect sort of your clients and your desk? Like, was that something that, was it a big deal or was that not a big deal?
It was a very big deal. It was a very big deal. When COVID started, everything was a big deal. Risk went through the roof. Volatility went through the roof. I remember being at home and myself and the team, we would log in every Sunday evening, afternoon to start monitoring the risk and be prepared for the week ahead because the moves were so volatile.
Mm-hmm.
And then similar when crude oil went negative, we almost kind of felt it because all of a sudden I remember CQG, which is a leading trading platform, and order routing, they added negative pricing.
Right.
Why would they add negative pricing?
Right.
And then the market went negative for a brief few days or whatever, and all of a sudden we had an influx of a lot of wealthy people that were trying to figure out how can they buy oil and store oil. And we're like, it's not that easy. You cannot just buy oil and store oil. You have to be set up as a hedger or a producer with the CME group. You have to show that you have insurance, means of transportation, means of storage. It's not like if you want to do something, you can buy the futures contract. That's very easy. Open an account, have the margin, and go for it. So it was a very interesting time, and it's still it's definitely not as volatile. But tomorrow we have CPI and FOMC. If anybody noticed CPI every month, you'll see. Again, a lot of our clients actually they trade crude oil, gold, but a lot of them trade the S&P 500, the Nasdaq 100, Bitcoin and micro Bitcoin. Just products that are that have good ranges, good volatility, and good volume. So CPI tomorrow, you'll see a couple of minutes before it's 5:30 a.m. in the West Coast. I'll be up. There's a vacuum. There's all of a sudden liquidity dries. You look at the depth of market, and all of a sudden the spread gets wide. I, for example, shut down a couple of algos that I run. Wait for the report to come out, the smoke to clear, and then I'll turn those algos back in. However, there's some traders that just wait for it. They can't wait. They'll put far away limits, both on the sell and the buy, to see if some fluke happens and they get filled. That's a fascinating event that happens tomorrow. And then we have FOMC, 11 a.m. Pacific time, 2 p.m. Eastern time. Volatility for the next 30 minutes until he starts talking. By him, I'm talking about Fed Chairman Powell. So those are a lot of in and outs. Another example that we share with clients on our daily blog is we noticed that the last almost year to 9 months, there's a lot of volume that happens in mini S&P futures, mini NASDAQ futures on the last 15 minutes of trading. And we found out that that's when a lot of the, like New York Stock Exchange and others, report what they call the imbalance for the market on close orders. So all of a sudden, on some days, you'll see that the last 10 minutes have a move that is almost bigger than 50% of the rest of the day. So this is what, like you said, trading keeps evolving. There's different, how should I say, maybe inefficiencies or phenoms that happen that you want to try to take advantage of it as a trader. And our job is to make our clients aware of it, understand it, try to explore it.
Yeah, that's fascinating. There's a couple other, just talking about the delivery on oil, there's kind of a, with precious metals and bullion, if you're trying to buy spot bullion, like real cash physical bullion, it always trades, $3 over spot for silver, for example. What's stopping someone from buying the silver future, taking delivery, and just, mining it into
With
coins and reselling it? How does?
even easier when it comes to silver, copper, gold, you can open an account, take delivery, make sure that you have enough money, that your broker knows about it in advance, and that it's set up for that. But then you're actually taking a delivery of an electronic receipt, unless you want to have that gold or silver transported to you in a secure way and store it in your house. But the clients that we have that take delivery usually take the electronic receipt because it's easier and it's cheaper. Some of our old timers, they want to see the actual gold in their safe, and then you have to arrange for it. It's not that hard. It's much easier. It's probably more efficient than doing the bullion, like you said, and you'll get fair pricing. Right now, gold is trading at 23.33. You put an order, I'll get you 23.33. That's the price of gold for delivery in August. And then when August comes beforehand, before the first notice day, you'll need to give me a heads up. Hey, I'm planning to take delivery. You'll need to have the full value of the contract in your account. Then we talk to the clearinghouse and, hey, Greg is looking to take delivery. He's probably going to take, not probably, he's going to take the electronic receipts. And then we have to go through the arrangement.
Interesting. So you've done both.
However, if that was oil, much different story,
Yes,
because
right.
you need to take delivery or provide delivery of actual crude oil.
Yeah, I need an oil
That
tanker.
shrinks the number of clearinghouses that actually allow for it, and it's something that needs to be set up in advance, not from today to tomorrow.
But even for precious metals, you've had customers go all the way for full physical delivery beyond just the electronic receipt.
Yes.
Wow, that's fascinating. Another.
Yes, although most of them will eventually just trade the futures and figure out that that's how they want to go by instead of dealing with the deliveries. But
Yeah.
yes, it's there.
That's cool. I mean, yeah, it's always nice to be able to sell options against your futures, which you can't really do with the gold bar in your safe in the living room.
So if you have the electronic receipt, some clearing firms will recognize it and will recognize the value. They'll probably they're not going to give you 100% of the value, but they'll give you a certain percentage.
Oh, wow.
Because they know, oh, you own receipt for 5,000 ounces of silver, or how many ounces you have. That equals to such and such value based on today's price, and you can use it for margin.
Cool. So another.
And if you go ahead.
Oh, sorry. Another market that's really interesting right now is cocoa. So we've seen cocoa go from mid 2000s to as high as 11,000 ish. Right now, I think we're about 9,000 or 8,700. What do you make of this market?
Fascinating. Cocoa, coffee, cotton, sugar, what we call the softs that trade on ice, have been the most volatile markets with the biggest moves that we've seen in a while since COVID and the whole situation. And cocoa really went ballistic. And there's a few things that come to mind. One is you never know how high is high. I get people, I remember a client calls me, hey, cocoa is about to reach 50. There's no way it's going to go past 50. I want to go short. And we just had a conversation about it. I'm like, why don't you wait for the market to give you a sign that it's going to go short? Sure enough, it was over 100. So a lot of those markets, when they make the moves, when everybody thinks it's done, there's usually one more wave before correction comes. The other thing, if we knew when those amazing moves come to an end, we'd be millionaires. I'd probably,
Right.
Maybe I'll be talking to you. I'm not sure, but maybe not.
Right.
But cocoa, coffee made a big move in cocoa, and the options on them, the volume picked up quite a bit. So there's much more interest. Yes.
Yeah, it's fascinating. The last time I checked, the implied vol on them was like in a 60 to 70 handle. It might have calmed down since, but that's crazier than crypto. The move from 2,000 to 11,000, that's a Bitcoin move. So that's a very kind of interesting comparison to see what's going on there.
Correct. And Bitcoin itself, we have the Bitcoin and the micro Bitcoin. So the micro Bitcoin on the CME today, about 35,000 contracts. That's respectable. It's something that you can day trade. It's not, it's not the mini S&P with 1.5 million. It's not the 10-year with 2 million. But it's decent enough volume that you can actually day trade it if you wanted to day trade it. And there's definitely enough range.
So switching over to crypto, what have you, obviously CME was the first kind of regulated product to come out with a crypto solution. What do you make in terms of the interest that you're seeing your customers towards crypto? or do you have any opinions on the Bitcoin futures, ETH futures, anything like that?
I think the Bitcoin futures and the micro Bitcoins are a great product.
Mm-hmm.
There's obviously some advantages and disadvantages because when you go into the crypto world, there's many other currencies. However, as a trader, you want to be where there's regulation, where your money is protected. It is probably a little bit harder to open a futures trading account and trade the micro Bitcoin than opening a crypto account and send money with a credit card. But if you're a serious trader, Bitcoin and micro Bitcoin and the CME is probably the number one place to be.
Yeah.
That being said, I'm not as familiar with the quote unquote off exchange that trades multiple cryptocurrencies and how regulated, how legit it is. Are those orders being handled by that carrier himself, or is there a centralized exchange, which I don't think there is?
Right. How about the sort of the carry costs or the contango in Bitcoin and Ethereum futures? I've seen it as high as 30% annualized in CME earlier in the year. What do you make of kind of that type of dynamic for something that has no true storage costs?
Well, it's the same thing like with this S&P 500. Mm-hmm. It's a function of interest rate. What is the current interest rate? And they have a formula that calculates it. As well as, I'm not going to say it's a function of what they perceive the price to be, but it really has to do with interest rate and volatility. Right now, I'm looking at the BRTI, the index. It's trading at 67,230. And we got the futures on the Bitcoin for June at 67,555. So a difference of about 300 points. Not a big difference when it comes to those prices, but not easy to explain the contango when it comes to products that do not have actual storage costs. But it has to do with interest rates and the value of money moving forward.
Yeah, it's very interesting because we've seen this in the offshore exchanges for quite a while. And it kind of seems like crypto has, because there wasn't a lot of professional products for people to take the other side of trades. It seems like once the market becomes bullish, the buyer demand outweighs anyone who can market make the other side, and you kind of get these crazy, essentially these crazy carry costs.
Fluctuations, crazy moves. Yes, I agree. I agree, and it's still a baby product, meaning yes, it's been around for a while, and there's much more legitimacy to it, and being listed on the CME gives it a lot of legitimacy. However, there's still a lot of unknown, a lot of uncertainty. People still wonder, including myself, where is the real practical use of it? I mean, I cannot go to the store and pay you with Bitcoin. I can rarely buy a house with a Bitcoin. So that is but then again, I'm 50-some, I'm not the young guy anymore. So maybe I see it differently than that 30-some sees it.
Sure.
Maybe that is the wave of the future. Maybe down the road, instead of ever comparing everything to the US dollar, it'll be compared to the Bitcoin. Who knows? Yeah. So the way I look at it is from a trading perspective.
Yeah.
Like I look at a chart. I don't care if it's Bitcoin or if it's soy meal. I want to know, is there enough volume? Is there enough range? Is it a market that actually has a chance to develop intraday trend? Or is it a market that is very choppy that you're looking for some mean reversion type of strategies? So that's what interests me. And Bitcoin is definitely one of those markets that develop intraday trends. And that's what day traders are looking for.
Yeah, that's great. So maybe you could just give us a little bit more information about Cannon Trading, and if someone wants to learn more or, use you guys for your services, where can they get more information? You mentioned you have a daily blog. Where can they find that? And maybe you could just give us just a brief overview, and then we'll wrap up with some fun questions.
Perfect. The best thing is to go to cannontrading.com. That's CANNON trading.com. The site, and I'm really not saying it because it's us, but has so much information that is legit information. It's not BS. It's been reviewed by compliance, by regulation, but it's been contributed by people like one of our brokers used to work on the Chicago Board of Trade floor. Okay, now the broker's been doing it for 30 years, and he's a spread specialist, for example. I myself developed a few algos, and I'm more on the technical side. So we have people with different strengths that contributed a lot of information, and we continue to do it on a daily basis. Now, you cannot invent the wheel on a daily basis, but on today's blog, we talked about CPI and FOMC tomorrow. Hey, be careful what to expect. Where's the vacuum? What's taking place? What markets for tomorrow are showing a long bias? What markets for tomorrow are showing a short bias, if at all? So canontrading.com, you start there and you want to sign up for a daily blog because you're going to get a wealth of information. Every day we tell people, traders, clients, prospects, hey, what reports are due tomorrow? What you should be on the lookout? What is the main support and resistance levels for, I believe, 18 different futures markets, including Bitcoin? And are there any markets that came up on our algo alert as a strong bias to the upside or the downside? Example, for tomorrow, we have mini NASDAQ, mini S&P with a bias to the upside, as well as natural gas. And I want to say we have copper, and funny enough, the mini Dow with a bias to the downside. So you definitely see a divergence here between the NASDAQ, S&P compared to the Dow and Russell. And that's where people will, not many times, but some people, when they get more advanced, they'll start trading spreads. Bitcoin, Ethereum, mini S&P, mini NASDAQ, Dow, mini Russell, wheat, corn. So canontrading.com, you can call, you can talk to a broker. You don't have to be on hold and go through like a complicated press 1 or press 2. And you will talk to somebody who knows trading, knows futures, knows commodities. You can open an account with a minimum of $1,000, although personally I don't recommend. I think if somebody does not have at least $3,000 to $5,000 risk capital, don't trade. Wait until you do. Fear is the number one enemy. Have realistic expectations. You cannot just go and shoot 10 jump shots and make it to the NBA. Put some time and work. The nice thing when it comes to trading in general is you can be anyone, anywhere. You can be a man, a woman. Doesn't matter your ethnicity. Doesn't matter anything. It's a matter of how bad you want it, how much you work for it, and how much, if it's for you or not. But it don't have to be 6'10" and jumping 40-inch vertical to make it, if I compare it to the NBA. So first step is visit our website, sign up for the daily blog, try our trading demo. We have a trading demo with live quotes, live charts, live news. You can trade Bitcoin futures, micro Bitcoin. You can trade mini S&P, crude oil, corn, wheat, cocoa, anything. And while you do it, you're going to get some updates. You're going to get some education. And it's really a great place for anybody to start trading. Or we do have more than large number, not a large number, but more than a good enough number of clients that are professionals that really are working with 7-8 figures, that trading is a big part of their income. But that is a dream that a lot of people try to aspire for, but it's not easy. So you got to be realistic,
Yeah, that makes a lot of sense. So speaking of which, along your journey, did you have any favorite trading books that you would recommend listeners?
There were more than a few. There's 2 of them. So one of them is the Market Wizards by Schwager. May not be as relevant nowadays compared to the stories that he shares in that book, but it was a fascinating book. Then there was another one, which is The Black Swan by Nassim Taleb. I really liked it, even though it's not a trading book. And then there was another book that I should have did my homework and got the name. It was talking about the need for speed in trading. And it was telling the stories how the real estate around the New York Stock Exchange and the Chicago Mercantile Exchange to build those fast speed data centers because of the arbitrage that the professionals were trying to that split second. So that also was fascinating, but again, not so much of a trading book. Yeah.
Oh, fantastic. And then last question here, Ilan. What do you like to do for fun outside of work?
I try to work out. Good for your mind, good for your body. I love to play golf, even though I'm like a Barkley kind of guy, 6'6", whose swings looks terrible, but I enjoy it a lot. And on the weekend, I definitely like to visit some either outdoors, like the beach or good wineries, and do some garden work. That's one of the advantages of living in Los Angeles. Yes, I wake up at 5, but usually I'm home by 2:30, 2:45.
Fantastic. Well, Ilan, thank you so much for coming on. It was really fascinating. Really appreciate the conversation.
Thank you, Greg. I appreciate it.
Absolutely.
And good trading to everyone who's listening.
Thank you, everyone. Catch you next time.